Good morning, everybody. Welcome to the Morning Kappa at 8 on a Wednesday, and I'm here to present the Midweek Futures Traders Technical Brief. We are on week 1, June 2026. Let's focus on this slide whereby we can see the most popular products traded by traders. And we have noticed that many of the products which has actually had a very good run, they are now in some sort of a consolidation, but that doesn't mean that it is the end of the uptrend. I'm speaking more on the context of the US indices. So US indices, we will touch a bit more later as we also go through the other products that we are covering here. Metals have remained pretty neutral, but the outstanding one will be copper, and this will be one of the recommendations which I'll speak on later on. And of course, we have also seen some action in the China A50 product, as well as also the Hang Seng. Hang Seng from negative is turned positive, and crude oil and natural gas both holding up due to the war in Iran and US. And as we look into our own markets, FKLI has remained pretty much on the negative side. But bearing in mind, there is actually a support that we are looking at the 1660 level. And so therefore, that level shouldn't go too much below if it really becomes a bearish trend. For crude palm oil, we are looking at a neutral stance currently. Palm oil had a pretty negative momentum in the recent week, but looking at current situation, it has gone into neutral. And this is crude palm oil. Basically, crude palm oil supported by basically the supply side, whereby we saw output fell by 5.9% in the first 20 days of May compared to the prior month. Also, industry players anticipate there's an onset of El Nino, which threatens to bring extended heat and also dry conditions that could suppress production across Malaysia and also Indonesia. So palm, as mentioned, is gone into a neutral setup, and therefore we will expect a bit more range-bound trading in the coming days and weeks ahead. And coming into the commitment of traders for US indices, there has been quite a big change in the S&P 500, whereby we saw quite a bit reduction in short positions. For the micro S&P, there is actually a spike up on the long side, about 14,000 lots. And for Nasdaq, there is a reduction of longs. And for the Dow, also a reduction of longs. But as we have seen the past few days, there has been also a massive rally which has pushed most of these indices to all-time high, indicating that the risk-on factor is still very much something that we are looking at. So why it's hitting new high is driven by a massive market-wide AI boom and also positive AI-related earnings guidance. These gains were tempered by caution of the Middle East geopolitical tensions and also the ongoing US-Iran negotiations. Coming to metals, as mentioned just now, we are going to focus on copper. Copper, basically, if we look at the commitment of traders, is flat, but the price action has been on the uptrend. And the reason why copper has been on the uptrend is because of tightening global supplies and also robust demand expectations, which continue to support the market. The EV segment is one which has been sucking up a lot of the supplies from the market. And for information, EV cars use 3 times as much copper compared to internal combustion cars. So Chile, being the world's largest producer, has reported its weakest April output in 23 years, and also reinforcing concerns about constrained global supply. So this is actually a very big factor. Supply side is squeezed. So coming to our futures market guide, we do have a recommendation for micro copper, whereby we see the short-term setup is positive, and the current price at 6.65, and we have a reference price at 6.53, and potential profit price will be at 6.75, and giving us potential USD of 550 and a potential loss of below the 6.330, giving us a potential loss of USD 500. Moving into energy, although we have been very much in tune with what is happening in the crude oil side, but we would like to bring our attention to natural gas, which is actually getting to be a bit more interesting. For cyclical play, June month has always been a up month for natural gas. Basically, this is the something which we have noticed, which is very prevalent. So currently, weather forecast of cooler weather in the June 6 to 10 basically is not good for natural gas. But if we look at what is happening on the general US expectation on its temperature, 2/3 of the US is expected to have above normal temperature for June 11 to 15, right? So this is actually a requirement that more gas is needed to power up air conditions. So this is the reason why June month and also entering the summer months in the US, there is actually a high demand for natural gas. Also, the outlook for the Strait of Hormuz to remain closed for the foreseeable future is supportive of natural gas prices. So for short-term setup, we do have a positive setup. Currently, the price for natural gas is 3.17. We have a reference price of 3.15, and the potential profit price is above the 3.38, which is giving us a US dollar value of 230 and a potential loss price of below 2.95, value of USD 200. We also like to bring your attention to our car campaign, slogan, building a better future through every trade. So every trade that you do through RHB, you will be entitled to earn an entry to win a Tesla car and also our supplementary prizes of iPhone 17. So do participate. That's all from me today. I'll pass on to Aiman. Thank you.
All right. Okay. Morning, everyone. Thank you, Vincent, on the weekly futures technical update. Looking at the Hang Seng Index, yesterday, Hang Seng underwent a very strong bullish momentum. In fact, it has been moving up for the last 3 consecutive sessions, while the US index have a mild pullback. So at this juncture, the Hang Seng have crossed above 20 and 50 days moving average, right? Showing the bulls are going stronger right now. Nevertheless, we still things that strong resistance will emerge at a 26,600 point level, right? We'll keep the bearish bias intact until it break past this 26,600 point level. And so as we know, there are three pieces of news that read over the weekend, right? Firstly, the Iran have rejected the reports saying that the president have resigned, right? And there is still exchanges of uh, a missile, right, between the Israel and the Lebanon, the Hezbollah group, right? And also, our Johor State Assembly have uh, dissolved, right? And the state elections going to be called within the next 60 days, right? So I think these are things that will actually swing the market sentiment. Nevertheless, looking at the Hong Kong market, right? In fact, I think the last 3 days, the sentiment is really very strong, led by Tencent, 700, and went up by 10%, right? And we can see that this is also first time or quite a long time that fund flow starts actually going back to the tech stocks in the Hong Kong market, right? So I think hopefully this round of rally could be sustained, and you can see that among the Hong Kong stocks, 992 Lenovo has been going up in tandem with a strong demand on the PC counters at the US market, right? And apart from Lenovo, I think one of the counter that have been moving up in the Hong Kong market is the CATL, right? CATL is the big battery player globally. I think they are the one that supply battery to the Tesla and many EV car makers. So CATL in Chinese name is called the Sidai, right? In Hong Kong, the stock code is 37550, and in China, it's listed at the Shenzhen A shares, right? And also looking at the Hong Kong, right? This CATL, we did technical reports about 1 week ago, and you can see that the CATL, right, 3750 in Hong Kong market continue to move up, and it has break a new high at 750. So this CATL is a double listing in the Hong Kong market, and since listing, I think right now the price is trading at record high in the Hong Kong market. Then on the Bank of China, right, 3988 stock code also break past 5 ringgit and 5 Hong Kong dollar 30 cents, showing that apart from the tech stocks, the funds also looking at the bank related counters. Okay, and so this morning we have two Hong Kong stock that seek your attention. Firstly, Tencent 700, right? Break past 740 Hong Kong dollars. Next level will be 500, followed by 525. Downside support is 445. And then on there's one VST ECS. I think as a Malaysian trader, you have been heard about VS Tech ECS or VS Tech, right, in Malaysia. But I also want to let you know there's one VST ECS in Hong Kong market as well that stock code 856 that have break past 12 Hong Kong dollar. After they release their results, very strong demand, very strong guidance on their top line, and very strong demand on the equipment for AI and send the stock rally, right? Next R1 will be 1350, followed by the 15 Hong Kong dollar. Downside support is 1050 Hong Kong dollar. Okay. Now on the China, right? A50 is one of the most traded Chinese index, which China A50 in the Singapore futures market. Looking at the index, is actually moving on a higher high basis. It's tracking the top 50 stocks in the Chinese market, right? And to ride on this uptrend, right, I'll be looking at one Chinese stocks, which is the China A shares Shenzhen 300750 that in the Shenzhen Stock Exchange, right? And so based on the technical setup, you can see that the resistance at 440 and break past, then it go to 460, then the 490, right? Downside support at somewhere around 400. And Looking at the S&P, right, I can see that S&P is one-way trend. I've been moving on a higher high. It's been steadily above the 20 days moving average. And first time you have crossed the 7,005, heading towards 8,000 level right now. Okay. So I think this month war has been irrelevant to the US market, right? News has been very fatigued, right? And there's nothing much developed apart from both Iran and US are blocking the Hormuz Straits. But you look at the oil price have been start to pull back, so market is actually looking at more avenue of oil from other parts of the world, right? And looking at here, I think the next thing the market will be looking at will be coming 17 June of the FOMC meeting, whether the Fed new chairman under this leadership will the Fed geared towards rate hike or rate cut. Okay. And looking at the last 1 week US performance, right? Market continue to look at the memory counters, related counters, but there's a new group of shares have been caught the market attentions, which led by Dell, right? Dell, I think over 1 week have went up by 50%, right? It also lift the sentiment on the other PC related counters such as IBM, right? Hewlett Packard, HPE also went up. So apart from that, one sector that I've shared with you previously, which is the cybersecurity, right? Continue to see the attentions on the market as well. Can see the Datadog, right? This CrowdStrike has been moving up. Then also server related counter like Cisco and Oracle also start to playing a strong rebound. Okay, so on this Datadog, you have a break past the resistance of 270, heading towards 300 and above. Okay, now as for the FPM KLCI, sentiment was a bit cautious since like 2 weeks ago that market is contemplating that we may call government may go for early GE, right? But as what we have learned last week, first state elections is going to be held at Johor, right? And hopefully with more clarity from all these elections, market will start to actually rebound, right? Typically, you look at FPM KLCI during the elections year, right? What I observed is that once the parliament dissolved or the usually that's where the index start to rebound, right? But when market is very unclear, right? Then all we shall see some profit taking. Also, last Friday is where the MSCI rebalancing activities took place, right? So that's where the saying sell in May and go away. So hopefully after the May selling, now we are going into the June, right? Market can start rebound again. So over the flow, right? The flows are still going into technology, went up by 4% over the week, led by followed by utilities and telecommunications. Weakness continue to be seen in energy, industrial, especially financial stocks have went down by 2% over the week. Okay. We still keep a bearish bias on the FKRI until it break past our 1745 level. For FCPO, we also have the same stance, bearish stance until it break past 4,007. Okay. As for Malaysia stocks, this morning we'll be looking at Dufu Technology. Dufu is one of the counter that we wrote in our small cap jewel recently. Yeah, break past 190 cents. Next hour will be 2 ringgit 20 and followed by 2 ringgit 50. Now the support 1 ringgit 70. Then on we have AMS Advanced Material, newly listed company. Break past 38 cents resistance, heading towards 41 and followed by 44. Right, now the support is market at 35 cents. So we have two breakout stock this morning, Dufu and followed by AMS. So I stop here and pass on to David on the MBSB result note. Thank you.
Okay, thanks, Joseph, and morning, everyone. So this morning we have a note out on MBSB. This is post his briefing that they had on 29th of May on Friday. To recap, their first quarter earnings missed our and consensus estimates. The key variances were weaker than expected margin, as well as some higher than expected credit costs for the quarter. But positively, what MBSB had shared was that its loan pipeline has actually stayed stable Q on Q at about 5 billion ringgit. This is despite about slightly under 2 billion ringgit being dispersed during the quarter. It does expect more drawdowns ahead from both commercial as well as the corporate segment. And with the enlarged base, MBSB thinks that this is going to be positive more for margin in the second half. And the margin should actually creep up closer to towards the 2% target, especially in the second half of the year. On the funding side, they said that the deposit competition in the first quarter was actually a bit stiffer than what they had expected. So that means they couldn't really cut rates as aggressively, but they think that should start to come in the second quarter onwards, and so margin should also improve from lower funding costs. So they have retained their 2% NIM target for the year, but given that the slow start and the weaker than expected first Q margin, we think that achieving an average of 2% is going to be tough for this year. And we have accordingly revised down our assumption to about 1.85%. The second one on asset quality outlook, there are no major signs of stress that they have seen so far among its borrowers. But they did say that it will take time for the Middle East conflict, the impact to actually take time to work through the supply chain. For now, they are staying watchful. But on the credit cost side, they have actually guided credit costs to be at the higher end of the 40 to 50 bips, that they had mentioned. So on the back of this, we have also raised our credit costs assumptions accordingly. The dividend, however, they said they will continue to pay out more than 90%, like they've been paying out in recent years, as long as they continue to be in excess capital position. And in our model, we have factored that to maintain above 90%. So overall, we have actually cut our FY26 to 28 net profit forecast by 28%, 14% and 11% respectively. The steeper cut in 26 reflects both margin as well as a higher credit cost. But we still expect margin to average about 2% in FY27 and 28. And hence, the revision is not as steep. The target price accordingly has been lowered to 70 cents from 79 cents based on the lower earnings that we now forecast. And on the back of that, we are downgrading our call to neutral from buy. Essentially that with the earnings revisions, we now forecast a dividend yield of about 5.5% for FY26. So this is no longer sector leading type of yields. And you can get 6% plus from some of the other banks where earnings are probably more defensive and safer, and that should also give you a bit more of dividend safety. So in the absence of that class leading type of a sector dividend yields, we think interest in the stock is likely going to be a bit more muted until your earnings momentum actually picks up significantly again ahead. So once again, we are cutting our target price to 70 cents from 79 cents, and we are downgrading our call at MBSB to neutral from buy. Okay, that's all for today. Thank you for joining us. Happy trading, and we'll see you again tomorrow at 8 a.m. in the RHB Morning Kappa at 8. Thanks, and have a good day ahead.